Good morning to you. Today we are going to discuss the question number 5 of which is question number 5, where they wanted us to prepare the manufacturing account, income statement, and extract of balance sheet and T accounts I have prepared here. Here we can make a space for workings. Okay, the space is enough. So I hope you will understand the way we do. Okay. Okay. So here, question number 5, they have said factory Ted is the owner of manufacturing business. The following information is available for the year ended 31st December 2023. They have said factory machinery cost 330 we had taken, and 142,000 is for the office equipment, and provision for depreciation 276 here machinery, and for the office equipment 67,000 they have taken, and inventory as at the 1st of January, opening inventory raw material 52,000 have taken, and work in progress 97,000 we have taken 97,000, and uh, finished goods opening cost 122,000 that is taken, right? Okay, 122,000, and 122,000 revenue of 4,268,000 that is taken. Okay, purchases 484,000 taken, and carried inwards 21,000 taken, and factory wages 626 taken, and 132,000 direct wages 132,000 taken, right? And 548,000 salaries and wages taken, and 21,000 carriage inwards taken, and carriage outwards 87,600 taken, and direct expenses 120,000 taken, and factory overhead it's 510,000 taken, and general expenses 276,000 taken, and 92,000 insurance and rates 92,000 taken, and rent 440,000 taken, and heating and lighting 178,000 taken. And we will see what is the what you call additional information given. In the additional information, they have given goods are transferred from the factory at the markup of 20,000. Right? Factory, here is the factory. Okay, factory. Right here, trading. Right? Here is the goods transferred at the rate of 20% markup. Right? They used to keep 20% markup. Okay, and yes, goods are transferred from factory at a markup of 20% increase in provision for unrealized profit, but at 31st December 20 amounted to 15,640. Increase in the unrealized profit increase in the unrealized profit. This does not mean carried forward, right? This is increase. Increase in the sense this has to be charged to the P&L, right? This is taken 15,840 increase in the unrealized profit. This has to be deducted from revenue, right? 15,840, right? This has to be deducted from the revenue. That's also we have taken. And inventory, raw materials, closing inventory, raw material 67,000, right? Raw material 67,000, right? That we have to take 67,000 raw material, right? And work in progress 102,000. 102,000 work in progress, closing stocks. And finished goods, they haven't given the complete. This we have to calculate. Okay, calculate the. We have to calculate this finished. Not the this one. We have to calculate the finished goods, right? Finished goods. How much we don't know, right? We have to calculate it, right? Okay, carry down of ratios. Keep it as it is, and we will just go through the adjustments. After that, at last we can. Non-current assets are depreciated at 15% per annum using the reducing balance method. This says non-current assets. Okay, non-current assets. Where's the Excel files? Wait, will you? This is 15% percentage in reducing balance method, right? So here is no point of opening the accounts, right? Because what is the balance? 330,000 is the balance, right? Divided by minus. We have to reduce the amount. How much? Accumulated depreciation 276,000. 276,000. Right? Then 54,000 is the balance. On the balance, we have to charge 15%. That is 8,100, right? 8,100 you have to charge it to the P&L, 8,100, right? And provision for depreciation you have to add it, right? So 284,100, 284,100 is the accumulated depreciation, and here you have to say depreciation, right? No, wait. Right here we can say rent, heating and lighting, right? Depreciation on machinery, how much? 8,100. 8,100 is the depreciation, right? And this has to be transferred to the P&L 8,100, right? This is accumulated depreciation. This is depreciation, right? And thereafter, provision for depreciation for the office equipments. how much the balance is? 142,000 is the balance, right? 142,000 balance. Out of that, you have to deduct 67,000. 67,000. So 67,000, if you deduct that one, balance should be 75,000. From 75,000, you have to calculate 0.15, 15 percentage, that is 11,150. Depreciation account debit 11,150. So here accumulated depreciation debited credited to 11,150, right? So you have to add it 78,150, 11,150, and P&L is 78,000, 11,150. P&L, you have to say office depreciation, right? Depreciation, okay. Office equipment, office equipment, that is 11,150. Here you have to accumulated depreciation is 78,000, 78,150, right? 78,150. Okay, that has to be deducted, right? That is 142,000 minus 78,150 in the sense 63,850. 63,850 is the balance, net book value, right? And 330,000 minus, you have to deduct 284,000, 284,100, 284 and 1. Then you will arrive at 45,900. It's the 45,900 is the net book value, right? So the non-current assets parts we have been finished, right? Depreciation we have provided, and extent of balance sheet also we have completed. Okay, so the next additional information is as at 31st December, right? The rent owing 40,000, right? First of all, we have mentioned that we have taken all the balances here. Here we have to say rent, calculation of rent, right? Factory, this is for factory, this is for office, right? This is for factory. Okay, understood? This is for factory, this is for office. First, rent. What they have said is rent owing. Rent is how much is the rent? 440,000. 440,000 plus how much is the owing? 40,000. 40,000, right? Yes, that's right. 40,000. And insurance and rates prepaid. Insurance and rates. Insurance, rents, and rates. How much? Insurance and rates is given. Insurance and rates is given 92,000. 92,000 plus how much they have said 6,000 is prepaid minus, right? Prepaid is the what is the called current assets. You have to add current assets. In the current assets, you have to say rent, right? Rent. Before saying the rent, closing stocks. Closing, rather than saying stock, closing stocks, you can say stocks. Finished goods, no, raw material. Other thing is work in progress, right? Other one is finished goods. This we had to take, right? That is, we had to take it at what is the cost price, right? And thereafter rent, no, insurance and rent, prepaid insurance, rents, and rates, right? Insurance and rates, they said 6,000 is prepaid. 6,000 prepaid, right? And under the current liability, they says, what is that? Rent, accrued expenses. Accrued expense is rent. Rent is how much accrued expenses? 40,000. They said 40,000 is rent payable. Here prepaid. This is prepaid. Okay. Prepaid. Prepaid. Right? 6,000. Okay. Then they says insurance and rates, rent, heat and light are apportioned. The heat and lights. Heat and light. L-I-G-H-T, light. Right? How much it is? Tell me, will you? Heating and lighting is 178,000. 178,000. Right? Now they says this factory 3/4. Factory will be 3/4. Right? 3/4. And that means 1/4 is the office. On office, for the office 1/4. So insurance and rates, rent and heating, lighting are apportioned 4/3 factory and 1/4 for general office. So rent costed to 480,000 total. Okay, 480,000. So these rates is 86,000. This is 178,000. If you say 480,000, right? If you say 480,000 is the 4 into 3 into 3. That means 360,000 is the rent for the factory. 360,000. Right? Then for the office, 120,000. For the office, it is 120,000. So we have to adjust the amounts here, right? We have to delete this, delete one, and they say office 120,000 for rent, right? 120,000. And rent for apportioned amount for the factory is 360,000. 360,000. Right? And insurance and rates is 86,000. Right? 86,000. 86 divided by 4 is 21.5 into 3. 64,500. 64,500 is the factory amount, and 21,500 is the office apportionment, right? For the office heating, lighting, 21,500, right? for insurance and sorry 21 insurance, right? Insurance, office equipment 8,100, right? Office equipment not 21,000, it is 21,500, right? Insurance ended 64,500 for factory, 64,500 for the factory. And heating and lighting, right? Heating and lighting 178,000. Hundred 44,000 into 3, right? 133,500. 133,500 and other one is 44,500. 44,500, right? Heating and lighting for office 44,500. 44,500 and for the factory 133,500. Yeah, right? We have calculated these rates and everything. Okay, then what they say is rent and rates. Production for the year ended 31st December 2016 was 80,000. This is 80,000 units were produced. Units produced. They have given one additional information saying 80,000 units were produced. Right. The opening stocks, we don't know what is the opening stock units wise. Closing stocks units wise also we don't know. Closing stock amount also we don't know. Right. Now, right. If you say like that, we have the what you call closing stocks we don't have, opening stocks of finished goods we have, right? Finished goods opening stocks and calculation of unrealized profit, right? Calculation of unrealized profits, right? And closing stocks and closing stocks, right? Unrealized profits and closing stocks. Here, opening stock they have given 120,000, 122 opening stocks. They have given 122,000. That means it is 120%, right? Into 20% is the opening unrealized profit, right? What is the opening unrealized profit? 122,000. If it is 122,000 is the 120% into 20%. Right? That means they haven't mentioned the opening stocks. Opening stocks, 8 million. Opening stocks, they haven't mentioned finished goods at cost. Right? Very careful when you are reading the question. Very carefully you have to read it, right? Because it is very careful. Very careful. In the inventory, opening inventory, they said at cost, finished goods at cost 122,000. Right? You have to make it cost means, okay, cost in the sense 122,000 is the 100%, then into 20%. 24,400, 24,400 is the unrealized part. In this case, they have given the opening stock at the cost value. So finished goods, we have mentioned 122,000. We have to take 122,000 plus profit margin, right? 122,000 plus profit margin. That means 122,000 plus 24,000, 24,400, 24,400, right? That is 120, 46,400, 146,400, 146,400, right? Opening stock, right? And if that is the case, opening value of the unrealized profit 24,400. 24,400. Have you understood what I am talking about that? Right? They have given opening stocks, right? Opening stocks they have given at cost, right? Here we have to take it plus not at the cost. We have to take it from the what you call in the we have to take it from the what you call this here we have to take it at the cost plus margin, right? Factory transfer price. So 146,400. Okay. So 122,000 cost and margin is 24,400 opening. We had added and put it. Here we have to mention the opening stock. 20 opening unrealized profit is 24,400. Okay. If that is the case, they haven't given closing stocks, closing value. Closing value is unrealized profits brought forward plus the portion increased in profit in the unrealized profit. That is right 42 and 1 5 5 5. 40,400 40,240. Shall we check the amount? 24,400 plus 15,840 is the 40,240. 40,240 is the carrying value and brought forward value for the next year also 40,240. If the if you say closing stock valuation, say closing stocks, right? Closing stock value, closing stock valuation, stock valuation is if margin if margin is margin is 40,240, right? This is the mathematical calculations. You must have brain to do that, otherwise you will lose, right? 40,240. That right? If margin is 40,200, then stocks, closing stocks. Then therefore, 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 closing stocks. Sing stocks will be 40,240 is the 20%, right? Into 120, right? 40,240. 1, 2, 3, 4, 5. Is the 40,250 divided by 20, right? Into 100. 201,200 is the closing stock value. This is the closing stock value. 201,200 closing stocks of finished goods, right? So they wanted us to calculate the closing stocks. We have done 201,200 is the closing stocks. Understood? This is the way of calculating the closing stock, because the in the exam, this in the question paper, they haven't given the closing stocks of the finished goods. So you are got stuck here in closing stock of finished goods. So you are compelled to calculate the closing stocks. How do you calculate the closing stocks? What are the informations available? Is they have given the information of brought forward. They haven't given brought forward unrealized profits. They haven't given. They have they gave they gave yeah, the brought forward they haven't given. That is also brought forward also unrealized profit we have calculated. Carried forward unrealized profit also we have calculated, right? Brought forward also we have calculated, right? Brought forward also we have calculated. This is number one. This is the number one, right? Calculation workings for that. This is number two. Number two is what we call closing stocks. Closing stocks. Closing stocks is the number two, right? This is the number two. Calculation for number two. We have calculated. This is the number two, right? Number three is carrying value. Carrying value. Carrying value is simply balancing this amount. Simply balancing the unrealized profits T account, right? The difference is what you call 40,240 is the unrealized profit. This unrealized profit, right? What you have to do is finished goods. You are taking finished goods, right? We have to bring it down here. Insurance and rates, RADS, rates, right? Prepaid, prepaid, right? This is 6,000, right? So we are just raising this. Okay, here finished goods we have taken. Finished goods we have told 201,200. 201,200 less unrealized profit, unrealized profits. That is 40,000, 40,240, right? 40,240, right? Understood? So if you deduct this, stock command will come, right? Stock command will come. That means 201,200 minus 40,240. That means 160,000 960. Right? This is the value of finished goods. Work in progress 102,000. Work in progress 102,000. Okay. Work in raw material, closing raw material 67,000. 67,000. This amount will not have a portion of unrealized profit because that is also cost. This is also we have brought it to the cost. Okay, understood. So this is the way of calculation, and I have given all the workings for you. All the adjustments most probably we have finished it, right? We have finished all the adjustments and we have to balance it. That is the thing. Have you all understood the what I have told? Have you understood? Because here depreciation calculation, normal calculation, you know depreciation account debit and unrealized depreciation is credited. That is finished. In the unrealized profits element, they have given the increase in the unrealized profits they have given, right? And they have given the opening stocks at cost, right? 122,000. If it is at cost, that is 100%, we have to calculate the 120% or 20% on that for the margin. Margin is 24,400. So unrealized profit brought forward is 24,400, and we are adding with the unrealized profit 24,400 plus the increase in the unrealized profits 15,840, that comes to 40,240. Then that is the amount should be carried down, and that is the amount which has to be used to calculate the closing stocks. Closing stocks, if the closing carried forward margin is 40,240, what is the closing stocks of finished goods? That is, for if the 40,240 is 20%, calculate it for 120%, that is comes to 201,200. So 201,200 is the closing stocks, right? 201,200 is the closing stocks. Out of 202, 202, 201 pound, 201,200 has to be recorded in the income statement 201,200, and in the balance sheet 201,200. But you cannot record the finished goods stock in hand at the higher value. You as per international accounting standards, says you had to record the stocks at the cost or net realizable value, which is the lower. So you cannot go for the 201,200. So you have to deduct the unrealized profit part, 40,240, and you are mentioning 160,960 as the cost of finished goods, right? Okay, finished. Then we will go for the what you call additions and balancing the accounts. Shall we balance the accounts? They have given what they have asked: manufacturing account, income statement, extract of balance sheet. This is the extract of balance sheet, right? We are not going to balance it because it won't balance because they didn't give the trial balance, right? They asked the extract of balance sheet. Now we can add the balance sheet accounts, right? Here 52,000 plus 484,000 plus 21,000. This is 587. 557,000 Out of that, you had to deduct 67,000, right? Out of that, you had to deduct the 67,000, then 490,000. 490,000 is the raw material consumed, right? Raw material consumed, right? This 490,000. Then with that, you have to add direct wages 626 plus direct expenses 120, then 1,236,000. 1,236,000. That is the prime cost. That is the prime cost, right? With that, conclude that, and you have to balance the factory overhead cost. That is 132,000 plus 510,900 plus 64,500, right? And 360,000 plus 133,500 plus 8,100, right? Then that comes to one 1,209,000. 1,209,000, right? Then at that one with the 1,236,000, then we will arrive 2,445,000. With that, you have to add 97,000. That is 97,000 plus 2,445,000. That is 2,542,000, right? Out of that, you have to deduct 102,000. 102,000. That is 2,440,000, right? You have to add the profit margin. What is the profit margin? Is 3.20%. Then profit margin is 488,000. 488,000, and that one with the 240, 2,440,000. Then 2,928,000 is the goods transferred amount. 2 million. So goods transferred amount is 2,928,000. Okay. With that, you have to add, right, with 2,928,000, you have to add 146,000, 146,000 and 400, right? Then that is 3 million, right? 3 million and 74,000 and 400, right? From that, you have to deduct 201,200. That means 2 million. Cost of sales is 2,873,200, right? This is the cost of sales. Then here, just keep that one, right? 4,268,000, right? 4,268,000 minus 15,840. Then that is 4,252,000 and 160. From that, you have to deduct 2,873,000 and 200. Then you will arrive at gross profit of 1,378,000 and 960. Right? 1,378,000 and 960. Now, right, you have added and you deduct the cost of sales from revenue is this one, unrealized profit 15,840, right? Increase in the unrealized profit P&L, that is 15,840. Then 4,252,160 is the net amount, right? From the net amount, you have to deduct the closing stocks of finished goods, not the closing stocks of finished goods. Cost of sales, then 2,873,200. Then you are arriving at a gross profit of 1,378,960, right? So we have to balance the administration expenses here, right? Administration expenses 548,000 plus 276,000 plus 21,500 plus 120,000 plus 44,500 plus 8,100. That is 1,018,100. This is 87,000, right? You have to add 87,000. Then you will arrive at 1,105,100. This has to be deducted, right? If we deduct it from 1,378,960, then you will arrive at net operating profit of 273,860, right? This is the net operating profit. Net operating profit. This is the net operating profit, right? This after before current long-term assets you would have, but here capital equity, under the equity you will have to mention capital not given, and here we add the profits are 273,806. This is the extract of balance sheet. This is the extract of balance sheet. Okay, have you understood? Have you got the picture now? Right? So here the closing stock we had to calculate the closing stocks, and that is one challenge we faced here. Another challenge we faced here is unrealized profits, calculation of unrealized profit brought forward balance and carried forward balance. Okay, so if you understood this one, it will be a great thing, and you can proceed with the next account also. So I hope you would have understood the thing, and I hope to meet you in next session. Thank you for joining. Thank you. If you have any clarification, you can contact me. Okay, thank you.